30,000. One company said 48,000.
Yeah,
so
yeah.
I said, can you come on the show? And he'll tell you the difference between a FICO score and a Vantage score. I did not know there was a difference.
Absolutely,
I don't even know
absolutely.
what that means.
So a FICO specifically when it comes to that, because my FICO will break down your FICO 1 all the way to your 10T. And obviously, when it comes to mortgages, it's not just your credit score, it's your debt to income ratio, it's how much your tax returns, and that's where Dr. Huie can come in, making sure you get your tax done properly. Also too, making sure, and like I said, like a lot of times people don't have income, but right here, this is an event. I can pay myself through my business right now. So understanding that will actually help me. Yep. Understanding understanding how to pay yourself through your business will actually help you
when it comes to the time for you to pay taxes, you don't have this big bill that's there. If you have a W-2, we are paying our taxes every 2 weeks. So if you have a business account, a money market account, and I'm not big with that financial account and put that tax every month that you have to pay. It'll gain interest. So when you take it out to pay the IRS, you have some of that money in there. You can't be a business person, make $100,000 and write off buy a house. They're gonna laugh at you. They're gonna go back and look at them taxes and make sure you did them correctly.
Exactly. And understanding specifically like when it comes to the write-offs, the gross income as opposed to the net income is really important. Just make sure, like I said, to speak with Dr. Huie and speak with your professionals that and don't go writing everything off, whatever the case is. But when it comes to my background, I actually purchased a new construction home under a credit card. I went to the Navy Federal, did a new home buyer's choice, 0% down, and it was I think $4,800 when it came to the down payment. But I had somebody invoice me. I used the credit card, paid it, and I got a gift letter, and I was actually able to legally pay and take that money and use it to actually for the down payment of the home.
Dropping gems and knowledge. I tell you, better come to the Wealth Club.
Yep, it's 0%. It's the Navy Federal New Home Buyer's Choice. It's 0% down. Wells Fargo has another one too. But yeah, it's just stuff like that. And this I like to I like to inform people, and especially you know, our people, because that's one of the biggest things is the fact that we gatekeep. So I do it live funding. You know, if somebody ever needed just even like a personal credit card, I just do some live funding. We help them get right and understanding the metrics when it comes to the banks. New credit, you're usually put on the bench for a little while. So what I'll do is also I
want you to elaborate on that when you get a chance, because I've had people who've come to me and they have a great score, but they don't understand that they don't have the credit depth for the type of things that they're looking at. You know what I'm saying? So explain that a little bit, you know, so that there's a difference. And this is why when we help clients with their funding, we make sure that we have able to look at that credit report and see what the actual payment history is, see what the actual usage is on your credit cards and all of that. So yeah, elaborate on that for me a bit.
Exactly. Let's talk comparable credit, right? When it comes to underwriting, there's a term called comparable credit. So if you want to, let's say, obtain business credit cards, you need to have personal credit cards, at least $5,000 to $10,000. And then what happens is a bank and an underwriter will see that, right? And then that counts as comparable credit. And let me explain it in another analogy. When you go in and you want to purchase a vehicle, let's say you want to get let me just say like a Lamborghini, that's $200,000. And let's say you make $300,000 a year. That's your debt to income ratio. However, you have never financed something for $200,000, so they will not give you the loan. Why? Because you don't have comparable credit. You need something at least 50%. So what they're going to want to see is if you want to finance a vehicle at $200,000, what we will do, you will need at least, let's say, a trade line that says that you paid an installment or have been paying an installment for at least $100,000. So there's many different ways where you actually get. Well, I'll go to Navy Federal. We'll go to another loan company. We'll get 2 loans. Prosper, whatever the case is, Navy Federal, Prosper, whatever.
Put your notepad out, guys.
We'll put together 2 loans, right? $50,000 a piece. Let's say, we go to Navy Federal. We get a $50,000 loan. There's no docs. You can go in your app and do it right now. And it pulls from TransUnion only. And let's say we got another loan. Let's say from PenFed. They pull from Equifax. And they won't know because it takes at least a month to actually show up on your personal credit. We take those 2 together, right? And then we place it into a secured loan that's for like $100,000. So now you have 3 loans paying back for $100,000. We pay them all, I would say 95% back like within a month. And then you probably have to wait around close to about a year, but you'll be built out to the point now your actual, not your bank card score, but your installment and your auto score is much higher, right? So that's a play in actually how to build out your credit on the installment. But now let's talk let's say business credit. Now you would actually need to obtain some personal credit cards. So you go to Apple, right? Apple will they'll do a soft pull, right? And if you went on TransUnion, after you get your soft pull and you get your pre-qualification, you can actually go and freeze your TransUnion after you get your pre-qualification. You hit submit, and they'll give you, let's say, a personal credit card for $5,000 or $10,000 without an inquiry.
Apple
will do it without an inquiry because they're Goldman Sachs underwritten. So what happens is banks pull from different bureaus, right? Capital One, I don't like them. They pull from all 3. We don't use Capital One, right? Capital One's in the doghouse, right?
Don't use Capital One.
Yeah.
They pull from all 3. So now explain to people who maybe who just, this is new to them when you're talking about credit. And so when we're talking about a credit score, most people are familiar with the score and all that. And I appreciate you breaking down some of the good places to get scores. You guys make sure you tap in. We do have direct access to credit bureaus. So you'll be able to pull your legit score and see what it is. So make sure you follow the link or DM us. But talk about how people could possibly have different scores on different bureaus, because people are thinking like, well, hey, man, it's me. These are the accounts that I have.
Absolutely. So what happens is those are data finishers, right? Let's say Navy Federal, PenFed, your student loans, those are called data furnishers. And there's a thing called Metro 2 compliance, right? Where they actually have to register with Metro 2 compliance and actually place the data through some type of, I don't know exactly, but to be able to place their trade lines onto their credit bureaus. So what happens is a lot of times they place inaccurate information, right? Whether it be, I don't know, let's say account number, the address, whatever the case is.
Employment.
So sometimes when it comes to the smaller banks and the smaller institutions, you'll see them they won't even report to, let's say, Equifax, right? But they'll report to TransUnion and Experian. I really can't think of anybody off the top of my head. like, let's say for instance, Rent Reporter, right? Rent Reporter is a company where you can actually get your rent reported. However, they do not report to Experian. They only report to TransUnion and Equifax. These are what they call credit builder accounts, right? And they'll actually backdate your rent for 2 years. So you can go right now and do that. Then what I tell people to do, since they don't report to Experian, then you go to Experian Boost and you can actually backdate. I'm not sure about backdating, but you can actually report your rent monthly using Experian Boost. But there's different ways in that, like I said, now that's FICO 9. FICO 9. Now FICO 8 is what they mostly use for banks. Because let's talk about like well, just to kind of just like specifically stay with your question, that is the answer. So I don't want to really kind of get off the topic, because you know me, I'll take a left turn and we wind up, you know, talking about almost anything.
No, man, it's all good, because this really lets people know the breadth and depth that goes into credit. Like, because again, you're just thinking that, hey, my score is 650, my score is 700. Which score? Yeah, which score? How are they pulling it and all and all. So one of the key reasons why business owners need to make sure that they have their personal credit straight is because while you're building that business credit, a lot of times they're going to ask you to personally guarantee that.
Right.
Yeah. So as a PG, a personal guarantee, that means that you're signing and saying, hey, I will be responsible for this corporation that I own or that I'm an officer of, and I'm going to make sure that this happens. And until your business gets really established, they're gonna always ask you to do that. And then, I mean, there's some banks that just do it anyway. Like, you know, I've been in banking for a long time. I'm not gonna call anybody's names, but there's some that a PG is in the covenant. They don't care how strong the business is, all of that. But can you elaborate on that, and like, what's the difference in building your personal credit versus building your business credit, and maybe give some tips for people who don't know that?
Absolutely. So you have business funding and business credit. Business credit is specifically with Dun & Bradstreet, Equifax Commercial, and Experian Intel. Dun & Bradstreet has a score between 0 and 100 is 80. I think Equifax Commercial, don't quote me, is between 0 and I think 400. Anything like around, I think 360 or 370 is a good score. Then you have Experian Intel. These are your EIN, your employer identification number. There is no social involved.
Right.
However, there's only 4 credit cards that I know. There's a few more, but the ones that I specifically know I have gotten for clients, what it was
Bank of America.
Oh no, that I think that's PG. It's
in relationship.
Sam's Club, Sam's Club, Torpago, Divvy, and these are EIN only cards. You need at least 2 years in business, and you need to actually have income for them. Now when it comes to the PG, now you have Bank of America, Truist, you have Navy Federal, they pull from Experian, Chase, and those are the ones that are personally guaranteed, and they give you much higher limits, and it's actually a revolving credit card. And now when it comes to the business credit card, those are net 30, net 60, and net 90, meaning that you have to pay them back within a certain amount of time, and your terms are a lot different. I tell people that I work with a lot of real estate investors. Like, I have a client, I know he don't mind if I shout him. His name is Ray.
Okay,
the first time the first time we went in, we actually got him some credit cards, and we got him around 150K from Chase, and it was, what is it? So right now, I think he's working on a project out in Augusta, and he hit. I think I showed Dr. Huie 30,000, and he's only paying like around $300 a month, because that's 1% of the principal balance. Right. So the point I'm making is, so that's the difference between the EIN only credit cards, the net 30, 60, 90, and then when it comes to the personal, when it comes to the actual credit cards, that's actually how they operate. They operate just like a regular credit card, where you pay 1% of the principal balance, and it's compound interest rate, whatever the case is. And they actually most of the time give you introductory rates, 0% interest rate, whatever the case is.
They do. And you know, one thing that's important that you know, I've had some clients find out the hard way, and heck, I even found out the hard way before. Those introductory rates are contingent upon you being A1. If the payment is due on the 10th of the month, don't send it on the 11th thinking that you're not 30 days late, you know, because it's not going to reflect your credit. But as Joseph was saying earlier, it's going to reflect your internal score with the bank. So then they start looking at you, and then they start doing funny things like adjusting your credit line and, you know, add on the standard interest rate and all of those things. So it's very important, like when you have those cards and they have those, especially if you're going to use those for business, which is what they're for. Understand your introductory period, understand when those things expire, and know how to keep that so that the bank doesn't put you in a bad situation. Because I tell you one thing, probably the only thing worse than getting capital to go ahead and fund your business and get things going is to get the capital and screw it up on something like that, and the bank cuts your line of credit by 30%. And now your capital stack is screwed. Oh yeah, I think it's happened to all of us.
I got $19,000 credit, no, $16,000 credit card. And I was like, ooh, and I think like after the second or third month, it dropped down to 10,000. I was like, wow. And I needed the rest because, I have a tax company and it has to run 24/7, 365 days of the year. So learning, I'm glad that we have you here. We're going to have you come back again because credit, what they say, credit is king and cash is queen. Or cash is queen and credit is king.
I used to say that line, man. I had one of my buddies. Cash is king, because one of the first dudes I know. Exactly. Yes, and it's amazing that he used to say that, but he was flexing on that W-2. He was making a lot of money selling cars. But yeah, credit. Because you can leverage it. You can leverage it.
Then if you only have $50,000 cash,
come on,
you can get 50. Joseph did it. He got me 3 credit cards. And guess what? Once you use your capital of your cash is gone, you can take those credit cards and go bankruptcy and don't lose anything.
Exactly.
But if you have your cash, I'm just saying.
Yeah. I mean, if business dictated, but you don't want to go into a strategy. But yes, you absolutely could.
You can lose $150,000 on a credit card, and if you only have $50,000 cash and you lose it, you're going to have to work to get back that $50,000. So they're saying cash is king. Cash is not king anymore.
Yeah. Cash plays the back seat right now.
It takes credit. If you're doing a fix and flip, who has $150,000, $300,000 to flip a house?
Exactly. And you're getting points every time you purchase lumber, every time you purchase any type of tools. But to speak on something you said earlier, when you get your limit slashed, this is usually why. A lot of times people don't know. If you go to Experian.com/disputes, you're going to see all of the different credit, it's going to amaze you of every single company that actually does soft pulls. So what happens is Blue Vine, American Express, different things, they will do soft pulls on your credit. And whenever you use your credit, like let's say you have high utilization, that's why most of the time people get their limits. They're like, wait, why did I get slashed? Because you don't have your credit frozen. So you always have your credit frozen at all times. Have your credit frozen. If you're not, let's say if you got a master credit card out on the personal side, right? Freeze your credit. Because I'm telling you, if you go on Experian.com/disputes and then you go and you look at the soft pull inquiries, it will amaze you. It will amaze you at who's doing it, right? So you have that. So everybody here should have download TransUnion, Equifax, and Experian, right? You get the actual the bureau. So whenever you wanted to do a dispute, let's talk the bankruptcy like you talked about earlier, right? Really quick. So bankruptcies, let's say the local court does not report, all right, to the bureau. So you write you can do it right now. You write the local court, ask them, are you reporting my bankruptcy to my to TransUnion Experian, right? They're gonna say no. So you take that letter and you write a letter to Pacer, to LexisNexis, and to the top 3 credit bureaus. Pacer and LexisNexis are third-party aggregators, right? They are the ones that Pacer actually gets your information from a data company. They're a data company that gets your information from judgments, right? So you get a letter from them saying that they do report. Well, guess what? Pacer and LexisNexis are not the actual judgment. So those are 2 discrepancies, and you can use 15 USC 1681 subsection D. That's permissible purpose. You can use that. Go in ChatGPT and create a dispute.
Sure.
And you go into TransUnion Equifax and Experian.com /disputes, and you upload the disputes and say, I need my bankruptcy deleted, and right there you can delete your bankruptcy.
Yeah. I did. I wasn't aware that even could happen. No, but I did have a brother who's still on the team who helps a lot with credit, and I was surprised. I had him help me out, and I had a situation, things went sideways with business, and I had to file, and he helped me get my credit straight, and I was surprised. When I looked, and I was like, hold up, public records, hold up, nothing, hold up, bro, man. Had to do the happy dance real quick, but No, that's huge, because there's a lot of people who aggregate our data that we don't really realize.
Exactly.
Just as you were mentioning about, you don't realize who's doing the soft pulls. I had a situation come up with my merchant processing. Business is up, so volume is up significantly. So the merchant processor decided that now I'm a higher risk, even though I haven't had any disputes, and they decided to hold a portion of all of my funds, right?
Probably Stripe, right?
Yeah, I wasn't gonna put them on blast, but shots fired. People already know how they get down. But I went through there and I was looking at the permissions, and to your point, you don't even realize that they have permission to check your bank balance. They have permission to run those soft credit checks. Yes, all in the background. And it's like, wow, man, like you don't even realize those things, because
the fine print.
The fine print. And that's crazy. And you know what's interesting to me, that I'm actually surprised that there's nothing out there so people can digest that, because there's no way in 30 seconds while they're having you tap on a screen or you're doing this thing to enroll, you can't read all that stuff. You know what I'm saying? Like it's not even possible. But anyway, I'm sorry. I digress.
No, you're good. You're good. That's amazing.
So as businesses, what are some of the common uses of funds? So as businesses grow, they get their business profile straight. Mm-hmm. So what are some of the common uses that you see people need the funds for?
Well, they'll use them for other things. However, banks want to see you use them for marketing and advertisement.
Right.
Because marketing and advertisement is one of the number one tools for client acquisition.
Right. Yes.
Right. So like, for instance, understanding KPIs, key performance indicators, mm-hmm. like understanding also, you see, these are terms that you need to get familiar with if you are in business. Like, how much does it cost to get this client mm-hmm. and close him or her, whatever the case is, right?
Absolutely.
Exactly. Because I think a lot of times, so when it comes to the funds, when you use the business credit card specifically for marketing and advertisement, those are the I would say, those are the tools, triggers, what have you, that will actually help the business succeed more.
Absolutely. I mean, you're doing something that's gonna level up the business, and I mean, you bring out something like with the KPIs. One of the things that we help our business owners do, we provide a free valuation snapshot, and for those who may not know what that is. It's just like an appraisal, but for your business. It takes into account your sales, what your debt looks like, what your cash reserves look like. All of these key things that you need to know if you're going to want to attract an investor. You're going to want to know what the bank is looking at. The bank is looking at the snapshot that I'm looking at as well when they're looking at the valuation of the business. That's why they ask for those financials and things of that nature. But we're able to help you, and you're able to see those KPIs and see how you're performing based on your SIC code, NAIC code, against other industries. And so you're able to benchmark that. Like, am my accounts receivable performing better or worse than the industry? Is my debt to equity more or less? Is my return on equity more or less? So those are some things I would encourage all business owners to take advantage of that. I don't know how long we're going to be able to offer that for free. If you call around and you ask your CPA or actuary something about that, you're going to get a number with a price tag in it. But yeah, let us help you out with that, because that's one of the key things in planning for your exit. We start these businesses, and you're helping people build a bankable business, build a bankable, scalable business. And the whole point of doing that is one day you want to exit, and you want to exit for top dollar. And the only way to make sure that happens is you have tight systems and tight processes in place, and you know what your numbers are.
Exactly. Do you want to talk about earlier? We spoke like valuation.
Yes.
Awesome. You were explaining it. Can you go in a little bit more depth with it?
Yeah, absolutely. So think of evaluation just like if you're going to sell something, the price might differ depending on where you sell it, right?
Gotcha.
If you had an old Xbox and you went to the flea market and you sold it, somebody might give you $20, $25. Yeah. If you take that to the game store, or you put it on eBay, they might give you $100 for it. If you take it to the game store, he might plug it up and realize that it's one of those Xboxes with all the games in there, downloaded, one of those special ones, and you might get that for five. He might pay you $500 for that. Well, it's similar with your valuation, because depending on what position your business is in, that number is going to differ. So you can sell just your business assets. Like if you were going to say, okay, like for example, if you had a waste company, you have a lot of roll-off dumpsters and trucks and all the rest of that, and you say, hey, you know what? I'm out of the business. I'm gonna sell all my stuff. I'm gonna sell the business assets. So that's one number that they would look at for evaluation. Then the most common one is called an enterprise valuation, where you sell the whole business all together. Gotcha. Your book of accounts, all of the business assets, the entire thing together. And that's typically the higher number that you're going to get. And the way to get that number higher is by having solid systems in place, because investors and private equity firms, anybody who wants to invest in your business, they don't want to inherit a problem, and they want to inherit a business that can virtually run itself, that you have systems that are so tight that if we enforce these systems that you built your business on, that we'll be able to continue at the rate of growth. And then then the last one that nobody ever wants to hear about is that liquidation value. And sometimes that comes into play, like when you're talking about bankruptcy for the business and things like that. That's the liquidation value. Right. Obviously, if I'm going to sell a garbage truck today, that's a $300,000 piece of equipment, but I need to sell it today at auction, I'm probably not going to get $300,000. Right. Now, if I could take my time and take some pictures of it and go around and reach out to some of the guys who have clients in that space, I probably could get closer to the regular number. But the liquidation value is like what they would look at, the court would look at for bankruptcies. And so there's two types of valuations. So you have that is the standard. And then also, if you're doing something for business purposes, like for a divorce or for a bankruptcy or for something that's very official, they will want you to get that certified. But yeah, man, that's just knowing what your business is worth. It's like having your house. You're going to know what your house is worth. Even if you're not going to sell it, you want to know. Okay. Right? Yeah.
Okay, so how can they reach you, AC, or how can they start with you first?
Yeah, sure. You can reach me at carconsulting.us, carconsulting.us. Just go ahead and schedule an appointment. We'll be happy to touch base with you. You can also give us a call at 470-478-4045, or you can check us out on social media, car_consulting or car consulting.
And you're giving away an evaluation for the whole month of October?
Yes.
Free, okay.
Free business valuation snapshot. So we're going to tell you what this number is. We're going to analyze the data from your financials. So you're going to need that balance sheet. You're going to need your profit and loss statement. You're going to need those pieces of information, because the more detailed the information is, the better the valuation is. It's like if you go on Zillow and you look up a house, there'll be a number on there, but if they haven't seen inside of the house, they can't really tell you what that number is. It could be higher, it could be lower. So yeah, having those financials in place and getting those things done is very important. But yes, free valuations for the month of October. We'll give you that snapshot of that number. We'll also review those KPIs with you, those key performance indicators, so you can see where you're benchmarking against other people. So then we can help you strategize, or you can strategize and figure out, okay, these are the areas I'm winning in, these are the areas I'm at par in, and these are the areas that are kicking my butt. How do I adjust this?
Gotcha. Okay, so in the IRS news, we have some good news and we have some bad news.
Give us good news first.
The standard deduction is going up in 2025. Who will benefit the most from the change? The single filer will now be $15,000, and married. I always tell people, file married is $30,000 next year. So that means if you as a couple make $100,000, $30,000 is taken off automatically off your total of what you made. Off the top. So, that's what it means, $30,000. So if you have a bill together, that means $30,000. That means most households, gotcha. You need to itemize. Also itemize.
Explain that, Dr. Huie. Some people don't know, like itemizing and standard deductions, like, because that's really big what you just said, and I want to make sure they catch that.
Standard deduction, everybody has a threshold. It's married, filing jointly, married, filing separately, the worst to do. is single and is head of household. Standard deduction mean if you make $100,000, most people, that's going to come off the top. So the rest of it is what your taxable income is. So 30,000 is off, is not taxed, because they say, okay, a married couple could live off of 30,000. I don't know. I don't know in this United States, but that's the standard.
With a passport, with a foreign passport, and residence in another country in South America, Africa, or the Caribbean. I don't know.
Right.
Just saying.
Okay.
That's crazy how they come up with these numbers, though. Like, who? Where?
I don't know. When poverty level is so crazy. And then also, we talked about it last week, the IRS is cutting staff. That means, sorry, I hate to do this. A lot of people are going to get remember I told you, the rapid refund and the pre-check, and the rich get richer and the poor get poorer. Your refund may take a little longer this year, and customer service wait. Sometimes when I'm with a client, sometimes the wait is from 45 minutes to 2 hours.
2 hours.
Yes.
How can they avoid what can they do to avoid having to call the IRS? Like what?
No one can avoid, because remember, mistakes happen. We're in a society that when you press a button, things can happen. You can have a mistake of saying single when you're double. When you have a social security number that's off, you can have an address that's off. And believe it or not, I've been to the IRS conference. You changing and making changes can trigger an audit.
That makes sense.
Be very careful, because remember, the system that they're using is still from 1960.
Interesting.
The system that they're using, this algorithm. Remember when I went and showed you your tax return online?
Yeah.
It doesn't look like what we see. It's just numbers and codes. It's numbers and codes and numbers. So when the database running from last year to this year, those codes have to match. If it doesn't match, like if you have a child this year, don't have a child next year, that can trigger audit. And a lot of people I've seen where they're blocked for 10 years from doing some of the credits because they have a child and the child is not theirs, and they have somebody else using their child this year and the next year. That can trigger audit. So be very, very, very careful. So it's important to file early, e-file if you can, and double check your return to avoid mistake that can cause delays and trigger audits.
Dr. Huie,
yes, boss.
I mean, maybe I'm just restating the obvious. That's why I want to hire you to do my taxes.
Exactly.
Why do I want to take that? Why do I want to take that risk? Like when I talk to the clients about payroll and I talk to them about taxes, I'm like, listen, there's no upside to doing this yourself. It's all liability. Right. Get some help from a professional. You're not saving nothing by running your payroll yourself. Exactly. You're not saving nothing by processing your taxes yourself, because again, taxes and penalties accrue. How often, Dr. Huie?
Oh, it's compounding interest daily. And people say, oh, they charge $400, but then you're giving time for money. Surgeon, would you want me doing surgery on you and I don't know nothing about a surgery? I go on TurboTax. TurboTax don't ask you question that a person. Ask him. He sat and we talked for almost 2 hours. He's like, I don't understand what I'm doing. And you went through it day by day, time by time. Yeah, if you're doing a simple tax return, it's okay to go on those apps and do it. But if you're pregnant, they're not going to ask you if you're pregnant. Georgia has a heartbeat law for pregnant women to get a credit. I've never seen a TurboTax question ask that. So you're leaving money on the table.
Absolutely. It's like the difference between getting your car detailed or just running it through the free car wash at the gas station and just spray some water on it and it might so people oftentimes it surprises me that people don't want to pay their advisors, and that's so crazy. Right. You want to build a business that's going to make multiple millions of dollars a year. You want to have strong business credit. You want to have strong personal credit so you can qualify for things, and you want to use TurboTax and write off $99,000 out of $100,000 worth of income. Come on, make it make sense, people. Get good advisors to tell you, because I'll tell you this, generally, if something feels really good right now, it generally has some long-term consequences. Yes. And when those things are a little bit painful now, you're generally setting yourself up for long-term success. Right. So like a perfect example is like on those taxes we're talking about. People want to write everything off. Right. Oh yeah, I don't have to pay $5,000 in taxes. Yeah, but you're not going to get that $2 million loan that you wanted because now you're showing them that you made $3 per month and you don't qualify for anything.
Or that $500,000 house you want.
Hey, Exactly. Hey, you're not going to qualify for nothing. The car might let you slide with just a score, but everybody else, they're going to want you to verify that. So do the right things. It's actually a good thing if you have to pay a little bit of taxes.
That
you know what I'm saying?
They didn't use your money. You getting a refund. That means you let somebody else hold your money and use your money. They don't realize that.
Exactly.
And it means you made some cake, you made some cheese, you made some dividends, some skrilla, some cabbage, however you want to refer to it. I mean, is that not the mission? And so you have to pay the cost of admission.
Be a boss.
You know what I'm saying? You have to pay the cost of admission. You know, and yeah, you can't cut corners. It's just like sometimes I'll see people skimping on business infrastructure the same way. It's like, okay, yeah, I want to do $1 million in sales, and okay, this is what I'm doing. And well, how are you keeping track of your customers? Well, I have this Excel spreadsheet. Well, how do you know when it's time for you to call them back? Oh, well, I make a note over here in this call. But how do you know when it's time? And you know, some of those same things, they say, oh, I could do that myself. I don't want to pay for an automation system. I don't want to pay for your software.
Throwing rocks at me.
I actually wasn't even thinking about you. I wasn't even calling. Listen, no, but listen, you didn't understand.
I didn't understand.
But what you did though is you trusted a trusted advisor to explain it to you, because at first it seemed like an unnecessary expense, and then when you saw what it was, you're like, oh, that's like turning the lights off to save money on my electrical bill, or cutting my open sign off. You know what I'm saying, to save money on electric on my business. No, that doesn't. Okay, cool. And you know, to your point, when you deploy those automation solutions and those software solutions, they work while you're not working, because I think you told me you came into 2 clients today. So you know, the system is working people while you're relaxing. And you know, that's the whole thing about building a good, strong business. You want to follow the system. You want to follow the blueprint on structuring your credit, on establishing your credit for your business. You want to establish good paperwork, good financials for your business, have a reputable tax preparer help you with your business. And you want to build a bankable, scalable business with systems where there's not a single point of failure, where you're not the only person who knows how to do that, or Tasha, who's in the office, if she quits, you're doomed because Tasha does everything. You can't even make a cup of coffee without Tasha. So you have to systemize those things and put them in a place and organize it, so people can come behind, and it's easy for you to bring them up to speed. They can read a job description. They can read the manual. You can have those videos and things, and that's what we help you do. So you don't have to duplicate those efforts over and over and over and over and over. Same information. Why not make a video? Why not make a way for your people to access that, where you don't have to literally say it? Yes.
Standard operation procedures.
Yes,
exactly. What you're not changing, you're choosing.
Right.
So a lot of people, they get into situations in business where they want to do everything. And I think it was Warren Buffett. I can't remember. I read a book. Exactly. And they asked him and said, what would you do if you do it all over again? He said, I work at McDonald's. He said, because at McDonald's, there's a guy at the window, there's a guy at the cashier, there's a guy doing burgers, there's a guy mopping, sweeping, there's a manager, right? Everybody has their tasks delegated, right? And that's exactly what you're saying, Brother AC. Delegate your tasks out. You can't do everything because that's a poor person's mindset, right? A wealthy person understands that I will have to pay to play. Right. Everybody wants the result, but nobody wants to do the process. Right? You know what I mean?
Yeah, and when you think about it, as you're building your business, as soon as you can organize that and describe it to where someone else can do it, it's no longer the highest function in your business for you as the CEO, as the president of your company. You need to be doing the hard things that nobody else can do. Nobody else has the authority to do. Networking, big part of it, but I mean, all of these things. But yeah, you have to organize it, man. That's huge. That's huge. I think you have to learn that, because sometimes people get caught up wanting to have 100% ownership, but 100% of nothing is nothing.
Right. You're going to hit a ceiling. And the biggest problem is, like, for instance, I used to I still live, I bodybuild. But understanding that a lot of people come to me when I used to personal train, and they say, I want this, I want that. They show me pictures of this body. And I would say within 90 days, you know, they're eating trash, not doing this. And I look them in the face, I'm really direct. I said, look, you don't want it. You don't want it. Facts. Because this is the life you're choosing. You like the idea of it, but you like the reality of it. Okay. And that's the same thing when it comes to business. A lot of people like the idea of $1 million, but they don't want to do the work. And to be honest with you, a lot of people don't work with me because of that, because I'm direct and I tell them straight up. And I think a lot of people need to hear that. They need to hear that they're being lazy. And but when they hire somebody like you to take care of that, then then they're able to delegate their tasks, like you said, to sales, into
we
marketing.
can organize it. So then now you can organize that in the task. You can help your business to grow, because like you said, to your point, you only have so much bandwidth. If you're touching everything yourself, you're only going to be able to grow to a certain point. And sometimes people have trouble shifting from the hustle mentality to the CEO mentality, because when you were hustling, when it was just you and you were doing what you had to do everything. But now you have a little bit of revenue, you have a little bit of capital, you've built up your client base. Invest in your infrastructure so that you're able to deliver your goods and services. Like you said, the cost of your goods and services can go down, because that's really big. So
one more surprise.
One more. Okay, hit us.
Deduction for car loan interest. If you own a car, you may be able to deduct up to $10,000
for car loan interest.
Yes.
What?
Not all loans qualified.
Okay, let's talk about it. Okay.
But you know, it's something behind all of these beautiful things.
Caveats,
people come buy all these cars to get all these interests, and so up to $10,000 in interest. And remember, refund checks stop. There will be no refund checks mailed to you, but I do have access to the credit card and the checks that come to me, so you can have it come to the account. I will print out a check and give it to you, and also a credit card. It's safer. It's faster, it's more reliable. When I do taxes, sometimes people get back their refund in 2 weeks, literally 2 weeks.
Wow.
Yeah, and
how's that credit card work? Can you explain?
You just put it on, the money comes onto the credit card, and you use it like a regular credit card.
That's easy. I like that. Yeah.
It's and then it helps you to, see what you have. Like, some people don't have a credit card because they do have bad credit. It could help them to build credit, because it's through Green Dot.
Okay.
Yeah. So the credit card is through Green Dot. So, everybody's gonna make money. I tell people,
that's it.
You cannot not pay for what you do, because
everybody needs a team.
Everybody,
Look at your favorite sports franchise, your favorite entertainer. Yeah, you're seeing that guy catch the ball, you're seeing that person in the movie, but guess what? It takes a whole bunch of people to make that machine go. And in business it's the same thing. So the wealthy people understand the value of having advisors around them, so that you can see different angles and different perspectives. We all have different experiences. So as we talk and build with each other, yes, theoretically, you might be able to go do some of these things yourself, but how much time is it going to take you? Are you going to be able to do it as proficient as the professional would be able to do it? And is it really worth you deploying your time to learn that? Because if you have to do this one time, why do I want to spend all this time learning this skill? I'd rather hire the guy who does it 100 times a day to help me with it, because he's an expert at it. He's done it too many times.
Okay. So we usually spotlight a new book, and we use strategies that can apply what they said, putting the knowledge in a book. And a $20 book can save you $20,000. That's the best ROI there ever is. So what are you reading this week?
Yes.
We only got a few minutes, whatever. But people listen, and when you plug it, I was like, okay, I want to read that too, because guess what? Reading, it helps build communication skills. The other one, comprehension skills. So some people, they read and they just don't know what they're reading. It helps build that. It helps put you in a safe space of you being able to look over what you're doing, because I'm studying for the EA exam right now, and I have a book. I'm actually reading it. I can underline and touch it and feel it. And that's how we were brought. So books, we always make that books. part. I went in his office. He has books all over the place. So what book are you? Just give us a little synopsis, like so a 1 minute.
I'm reading the 5 Keys to Pattern Success.
Okay.
By A.C. Lockyer. So replicate success at will in your business and your personal business life. And so it's really talking about some of the same things we're talking about, really organizing your business, being deliberate in what you're doing, making sure that, understanding what you're going to do, and then committing to the execution, and just a framework so that you can make decisions in your business and move forward quickly. Like, for example, a lot of really successful people, you'll notice that some of them wear the exact same thing every single day. And the reason why they do that is because our brains only have so much power. We only have so much power per day to make decisions. So why am I going to waste time on a selection of, you know, whatever? And there's nothing wrong if you want to do that. At least do it the night before, so you don't have to waste the brain power of the current day, you know, on that. But that's why you see some of those guys just wear a black sweatshirt every day. You know what I'm saying? They wear a hoodie, they wear a white business dress shirt with jeans, you know, because it just makes it very simple to keep going. And so anything that you can make simple with business, with your business, with patterns, then you're able to duplicate that. And you know, so yeah, that's what I'm reading. I definitely say it's worth the $20 that you would cost you for the book. AC Lockyer, he built several service-based businesses and has generated hundreds and hundreds of millions of dollars as an entrepreneur. He's a fourth-generation service business entrepreneur. So he had a lot of real-life experience. So I love it when you get something from someone who's lived it. Because when you read something from someone who's lived it, it's a lot different than theory because they've walked it. Okay,
final thought. What does wealth look like to you? What is it?
Freedom. Really just simple freedom. The ability to be with my family, be with my kids, and just live life and actually live life in purpose, right? Because I'm in ministry, Restoration Church of Deliverance out of Snellville, Georgia. I work as a deliverance minister there. So really being able to work in my purpose and my true calling in God and the Lord Jesus Christ of Nazareth. Exactly. So, but yeah, that's specific.
There. So wealth is financial wealth, having enough savings, investment, and income to live comfortable. You know, health wealth. We talk about the young lady that had a stroke in her 30s. Guys, take time for your body. Please take time for your body, for your mind, for your soul. It's your greatest asset. Relationship wealth with your family, your friends, and community. He does things. He does mentorship in the community. You feel better when you give back. It's just part of what we're here to do. Time wealth, the freedom, like AC was saying, give up some of the control over the business and have more time for yourself. You know, the freedom to spend more time what you want, your passion, your family. Why would you be
to have a business and now you're gonna buy yourself a job? That's what you're you know, that's worse than working for somebody else. If you want a job, you know, listen, go work for an entrepreneur who's really knocking it out the park. Don't buy a job for yourself, because you can never take a day off and it's really not worth it. So, you know, freedom, like you said, that's really what it's all about. So man, I can't believe our time is up already. I'm AC, the money guy. I'm here with my lovely co-host, Dr. Shanann Huie, the Tax Diva, and our special guest today, yes, Mr. Joseph
Grimmett.
Joseph Grimmett. Brother, we appreciate the knowledge. We appreciate you helping us understand some things, because credit is something that's very complicated. And even me as a consultant and a financial professional who's been in the industry for 20 plus years, I rely on people like Joseph over here to help me understand things. Because again, even as me as a consultant, I can't do everything. I realize that I have to have a team of advisors as well. So hey, join us next week, same time, 6 p.m. Eastern, 3 p.m. Pacific. We're unlocking this wealth code, one combination at a time.
Until next time, this is Dr. Shanann Huie. Stay smart, stay disciplined, and keep unlocking your wealth, whatever that means to you. Have a fabulous, fabulous, fabulous week on purpose.
That was good. Yeah, it was nice.
Now y'all look good.
Oh, wow. This is good.
Wow.
All right. Yeah, we out of there.
Nice.